Yes, okay, it's the Crypto Sniper coming back at you. Welcome, hit the like and a share. I'm going to do a rare video actually, or I have done a little bit before, but on Hex. That's right, so technical analysis video on Hex, courtesy of the Crypto Sniper. Before I start, it's a vibrant community, it's energetic and strong community. So let's be clear, when you do a bear call, it doesn't mean you're a hater. Richard actually helped make me wise on MetaMask handling and a variety of things. So there's no access to grind. I've actually been for an extended period very bullish Hex. So this is the Hex chart without any annotations. Let's go log scale actually, just so that we can get some common sense out of it. This means you're having a look at it at a percentage base. This is Hex versus USDC. Okay, so throughout large parts of this on the upside, we were benefiting from the upside and did rather well. Further up here, we called a head and shoulder and said that was likely the high for Hex in our opinion, and we've been of a bearish incline. So you're not enjoying that, I understand, but I'm going to tell you what I see regardless of whether it hurts feelings or you disagree. It's actually great if you disagree, because I have an offer for you coming at the end of this clip, which you can exploit indeed. So recognize that and don't go away. So let's give you the reasons why I'm bearish and have continued to be bearish and felt that the top was in over there. This is a monthly, or it's a weekly chart. I lie, it's a weekly. Let's drop it down to a 3-day and get a bit more detail what's going on over here. So during this period, we were fortunate enough to have been engaged. I got the final tail end of a sacrifice on the original Hex, and I was kind of in sub a cent, 0.79, 0.8. Many people before me, well done. I got the last bonus, and then it fell quite badly. I think that was over here. I think that was it over there. So I was in and around, and I got in quite high. It was around 7 or 8 tenths, and it washed out quite substantially after the last bonus. And then I got in again, but further leveraged in and around this period. So this is kind of small look at my entire history with Hex, and said, actually, I'm going to hold, and I continue to hold through this quite a big dip in value despite getting that last bonus. And I'm now and have been in 100% out of Hex for a long time, so I'm not staked or anything like that, but I did have the benefit of a very good run, and I did take off during part of this, so I'm grateful for that. Let's have a look at the technicals and why we've been bearish for so long, and then what do we see coming next in terms of where we are at and why we're currently bearish, and how, if you have a different view to me, there's actually a very good opportunity that's coming to you pertaining to Pulse and PulseX, because I was also a sacrificer there, so you'll know where I'm coming from. And so I have been a supporter of the projects to quite some degree. So let's just bring it into the future from the what I'd call the top. This was for us a head and shoulders top over there, left head. And this was very much a localized high, and we expected overperformance. We had the 37.5 neckline. We expected that to come past the target and to be part of a larger bear. We all know the reasons why crypto generally has gone down on a lot of levels, so it's been a tough old spell, and here's one of my reasons why I remain still a little bit concerned. However, if you are of a different view, that's awesome. And as I say, you will have an opportunity potentially to take the other side of an opportunity with me with regards to this. So these were the technical elements that were a tad bearish that brought it down. A lot of key funnel levels on the way up. This is the concern today, though, for me, generally, that many people are probably, who are not of a technical bias, on taking into account. Let's go back up to a slightly bigger level. It sometimes highlights the rarity of the levels that we are touching at the moment. Let's clean that face there again. What's happened recently on Hex is that on a 2-day time frame, you've not closed at any point lower than those two lows over there. This is since the high, by the way, obviously in the beginning and the whole whatever, but this is a key technical level that is allowed to be run, and you're now been below the 3 cent. We've said a couple of times that we felt there's scope for it to fall sub the cent, and possibly more, but that's a level for us which we have as a result of key levels of significance all the way down that we have from the journey up. So we feel that there's a potential for a bit of a round tripping. We also at one point tweeted that this was a strong rejection. So there have been what I would describe as plunge protection buyouts. Now, I don't know who might be behind that, whether it's just retail market or maybe something else. But there has been a few events where you've had a bit of a spike to the upside, which wasn't followed through on any great particular scale. So this can be what I typically perceive as possible insider against the overall market rate fall. Don't forget, the whole market cap falsely is being, and Richard's highlighted and said a lot about market cap, and he's broadly right on that, is the value of a current share times by the number of shares in issue. Well, if you can control the value of that individual token, you maintain a higher market cap for all the other tokens, even though liquidity is actually very narrow and very thin. What's actually happening though is that we are getting a bleed out, and it's requiring maybe a bit too much support, especially if you've got shopping you would like to do, for example. So as a result, that is not a good development. The fact that it's peed off the roof there. I possibly, if it had broken up and smashed through this line and there was real organic reason and validation and movement to the upside, that could have been something quite bullish. You could have had a little bit of a descending triangle that's actually breaking to the upside. But the concern is most of the volume is actually tapping on the floor and has been allowed to run. What you often get is a return move after that, but generally that serves as resistance and you make your way further down, which is not welcome for the Hex token potentially. This was the funnel break that was the originator of the move, sub a cent all the way through at its all-time high in and around 51.8 cents, which is what it looks like to me as an all-time high, 51.6 since this event. So as we know, this is as a beta, quite a high beta token as well. And I'm just going to highlight Hex Dominance now. Now, in Hex Dominance, we're actually comparing it to all the other tokens, which will include a bit of Bitcoin, a bit of Ethereum, a bit of, all the bigger guys first. And then it also includes stable coins, I believe. I stand corrected. But the concern here is that it's also been in a bleed out and it's trying to hold a level and is now leaning on that level. This is an unfortunate chain of events for the future of that token. You can see Hex Dominance, since its high, that again would have been related to the 51 cents, where in actual fact it was almost 4.3, 4.35, going on 4.4% of all market cap. It is now at 0.06, so dominance is being bled out, and it's looking to hold a particular value at the moment. That's in spite of other tokens like Sol losing a lot more and many others losing an incredible amount of dominance. So Hex is also a dominant shedder at the moment for me. It is indeed. But it had a huge push, and the rate at which it's losing dominance is not at the same degree. So the momentum that took it up was high, but you've had a series of sustained selling off in dominance, and now you have again this flat bottom here on dominance. Only in the dominance it's not yet broken. My concern is that that will break and it will trade further to the downside. As someone who's no longer holding Hex, that's not a bad, personally for me, but for many people that are, that's a slight bit of a concern. What else do you have a look at when you're looking at Hex? Well, it was a large amount of Ethereum was sacrificed for it. And I want to highlight that that's a falling wedge. Now, many of you who have a little bit of tech knowledge will say, isn't that good that it's a falling wedge? Well, technically, it could be good if it broke to the upside, but that doesn't always occur. What sometimes happens is you have a major spill. So when you're squeezing like this, essentially you're building up to another macro move. Now, if you think a bull market is about to break out, and there's a lot of pool multiples and on-chain analysis that suggests Bitcoin is extremely oversold, you might be 180 degrees diametrically opposed to me. So, many will say it's far from a fresh bull. It's a stale bull, a stale bear, apologies. It's far from a fresh bear market. You know, Bitcoin 69 was some time ago now. It's a lengthy bear market, and you may want to take the other side of that. As I say, great opportunity coming at the end of this video that I'll be showing you. But for me, I have more macro concerns that there's more than just a 4-year cycle. That is the Bitcoin halvening and the Bitcoin in going from bull market, bear market, bull market, bear market, non-stop, always going to go making higher highs and then higher lows on an open-ended basis. I think central bank digital currencies will not like the competition, of stable coins, and potentially will also have some issue with Bitcoin in a while, potentially. And I think surveillance finance is the game, and that's what they're bringing. But back to this particular look on Hex versus ETH, you had some candles. This was probably your lowest candle body. Ignore the wicks for now. These were small periods on possibly light volume, a bit of panic selling that got bought back up. There it got bought back up. Again, some concern here for a bit of plunge protection buying being illustrated. Some will say there could be bad data in the charts. I don't know. Might well be as well. You should always bear in mind that data isn't necessarily being cleaned by these guys. They might have just got a wrong number and lost a zero. But we did see on the USDC that there was also plunge protection there. So some of these are probably authentic, and there might be some that aren't. Anyway, there's a flat bottom here roughly. Where is it? Let's get that out the way and tell you roughly where the level is. For me, it looks around the 2.25-ish, the lowest low, 2.25. That's many zeros, so to Ethereum, obviously. It's 4, I believe, and my eyes are squinting. I could easily drop one there. It might even be 5, I'm not entirely sure. 4 zeros, 2.25 for Hex's relative performance. Now, this looked like it was rejecting after a little spill to the bottom, but it only went so far, and then it's coming back down. I call that a bit of a fatal attraction for finding the floor, and in the floor there is a trapdoor, unfortunately, that takes you into a lower basement. So potentially that's a concern. However, if it survives this, it's actually a crossroads, and you could theoretically at some point have a break that takes it through the upside of this overall falling wedge. So how do you know? Well, it's difficult to know, but some people will prefer not, if cryptos to be taken to the cleaners, which it feels that FTX certainly was part and parcel of, and I was adversely affected. It's good to know that, because you might say, well, there's a butthurt person, he's very bearish, and as a result he's lost some money, and that's why he's so bearish, and now he's puking on Hex. Actually, I think it's a bottom. I'm ready to take the other side and have a look at his pulse bags and his PulseX bags, and I'll take it off him if he's selling, which he will be, and he'll give you some details on number and what he's looking for. So that is not so technically good, but it is a little bit also of a fork. It's going to go one way or the other. When I look at it against the USDC, you can see the similarity. I just leave the jaws of the previous one. It's kind of pippying through, a little bit of pippy out the bottom there, but all of that could be resurrected. But my overall feeling is that you're going to end up running into this funnel at some point, and further downside would happen. It's interesting to note that the legacy target, we talk about HVF levels, by the way. We run a trading community called themarketsniper.com, and we talk about key levels being run. Richard says don't trade, and in many instances actually he's right. Most people do destructive things with trading, so I don't disagree with that, and I would say you need to have a method and a process to do well. But I will also say wearing 51.9 cents all the way down to some undefined possible low, which is already at 2.8 cents. Even with all your staking, at maximum staking, if you did 4 5s, you've eaten a lot of capital damage, which a normal trader would not have allowed to have happened. So the value of trading is, in fact, not marrying into a belief system, avoiding becoming a cultist, whether it's a Bitcoin maxi or any other variety, and recognizing that at some point things might change in the industry. Some of you will say he's too smart, he's on the right side of the Howey test. The problem is, if you're a US guy and you've marketed Hex, as I think the hexologist is finding out, I saw a search that said that he was advised to stop by his lawyer and that he'd received some form of a subpoena. The key thing is anything that's crypto, they're going to send out a subpoena on. And if they decide that the original intention, even though the letter of the law of what you issued is trying to be too smart, but everybody's intention and your intention was to sell token go up, even if you tiptoe around that intention and say, admit it, you're all just giving me the money as a sacrifice, they may just, with dominance and legal might, in a bid to kill private crypto. Note I say private crypto, blockchain isn't going away. Central bank digital currencies will work on many of the same tech. I don't think Ethereum's going away. They're going to turn it and weaponize it against us. I don't think, a lot of things. I don't think XRP, who's courted the bankers very, very strongly. You may find the central bank digital tokens run on something very similar to it. So this is not an end of blockchain type call. It's just the end of freedom of you having your own or believing you had your own money. If in fact that ever was the case, I have my own views of what I don't think happened in terms of Satoshi, the mythical man who did all of this for you and left quietly and anonymously, left of center stage. Anyway, enough of that. So that's a little bit of an update generally on the dominance of Hex, which has lost a lot of ground, even against other crypto, after admittedly also though on the bull side gaining a lot of dominance. So it's a higher beta version of Bitcoin, and how's it doing versus Bitcoin? Let's have a little look. Actually, it's not a chart I've actually done because Ethereum has been the bedfellow, but just to highlight that, let's see if we can get a Hex BTC chart so that we can give you a full yeah, the computer says no, so it's probably not. We might get wrapped. No, we're not getting that either. So you can see that you'll just have to make do with USDC. I'm sure guys are screaming at their computers, no, there's a place here, or Uniswap this, whatever. So that's all the charts that I typically have for Hex. For some of you, you might say, well, what does that mean generally for crypto? And you might still have a passing interest in Bitcoin. And this is an equally messy chart that you'll see. This is what we do, key levels of significance. We still feel Bitcoin has got the potential for further downside. So as a key element, we see a target down here of a head and shoulder, the blue head and shoulder. It's come almost all the way down there. That's a 15 grand. So we've called a 15 and we've also called for a possible 12. So being bearish on Bitcoin is not actually supportive, I don't think, for Hex, because it's also a bellwether for crypto as a whole. And of course the FTX events and all the other things. I'm not sure the contagion and the capture is fully being revealed of all of those things. Although we've also had the, before it in May, the 3 Arrows Capital. Anyway, we can all speculate. That's only opinion. That personally is my view that Bitcoin will still have a bit more downside to go as a result of these. Lots of downside targets yet to be run. Currently in what we call a little bit of a downside break, although in fairness recently this is why I say there is an element of also a stale bull. So for those of you saying it's a bottom, it's max pessimism, it's going to turn and so will Hex and all of these things, only Hex will go up faster. This could indeed invalidate quite quickly, this little structure. We got to, if you were trading this, I'm not short Bitcoin, you would have a stop here. It's only gone so far and it started to reverse. So that structure A could fail, which could mean a turning in the crypto markets possibly, or just an extending and then another bearish setup setting up that won't fail or might also fail. So the point of the matter is, you're not getting clear-cut, just straight spills. We've had some big spills recently, but on this lower time frames, I reduce the reliability generally of patterns. And when you get a pushback of pretty firm momentum like this, it could continue to recover. So it may get respite for a while and then get hit later, or it could be a bottom. That's up to you to determine for yourself. At the moment, we have a downside structure, which is underperforming after a dip, but it has still some more time. Okay, so that's a tiny bit on Bitcoin as well. So what do we have for you? I did a sacrifice as well. 2 sacrifices that I did, and one was for Pulse, which was my larger, and at the time it was just under $190,000, and the total received Pulse will be just under 3 billion. So PLS, just under 3, 2.903 in Pulse. That was the value. That is available providing you're taking the PulseX. So what is the offer? The Pulse and the PulseX, take them both, which I'll be showing you the PulseX in a second, for a 50% premium. If you're just into the Pulse, you'll be looking at a 2x, so 100% premium on the value for that I received. And on the PulseX, for those that are still with me, the PulseX, the total that I had, and let's just box those in as well, 100,000 was sacrificed and just under 1.5. So just under 3 billion, 2.9, just through the 2.9 level, and just under 1.5 billion in PulseX. This comes from the tools that are designed by the Hexologist guys, the Hex guys, I mean, and the PulseX guys and the Pulse guys. The tool for your showing your sacrifice amount and bonuses, etc. So roughly 1.5, roughly 2.9 stroke 3 in PulseX and Pulse PLS. And if you take the job lot, $425,000. That's it. You're done. You have almost 3 billion in Pulse and everything that will go, assuming it all comes out as expected, and just under 1.5 billion on PulseX as well. And good luck to you for any upside that you receive. I wish you well, and you know, it's yours. And congrats. It's a risky time, and you've been bold. So that's the deal. If you just want the PulseX, I'm doing a 1.75. If you just want the Pulse, I'm doing a 2x of it. I only want to deal with one person. Message us on support@themarketsniper. I am taking it out. Why? What are my reasons, by the way, if it wasn't already clear? FTX collapse took a sizable portion of my trading pot and liquidity, so I'll recapitalize that. Some concern about the delay in the project coming out. I've carried it for a certain period, so I have a certain time. In all my trading, I have a time stop. If it hasn't done X, Y, Z, it applies to my investment as well. I think it's been a reasonable period of holding by which I would have expected the project to be out by now. Third, some concerns about regulators and CBDCs, to be frank, that they will come for private crypto to some degree. How much time we have, I don't know, but I saw the FTX as a negative development in terms of how much time we have. What other reasons? Apart from that, getting liquid and having good old cold hard cash, and maybe overweighting in that thing that many of you hate, but silver, which I am, precious metals generally, which I'd like to rebalance towards. So those are my reasons for sale. Some positive news for people that are being bold at this time, which is actually can serve you very well, actually, because there's actually a lot of negativity in crypto, and I'm generally not one who likes to sell into that. But it's in the price, I suppose, because many people are expecting 3x, 5x, 10x, possibly even more for both these projects. There is a space for a low-cost Ethereum network, and if that gets delivered, it will be awesome. And in actual fact, some positivity that makes me sometimes think I might not be doing the right thing is that the dollar has turned back from a key channel top after making our upside target. The dollar has been very, very strong during this period, and it's been very bearish for crypto generally. So you can see roughly from 2022 May and March all the way up to present until this last rally. So if you have a look at a Bitcoin chart on the monthly, it's actually been pretty much down if I split the screen. And crypto as a whole, I know Hexicans don't see Bitcoin as the same thing. I know it's not the same thing, etc., etc. But if we were to have a look at the overall sentiment for crypto, it's been adverse during this dollar strength period. So if I just get Bitcoin in here instead of some of the other things we like to trade, don't forget themarketsniper.com. Yes, you can become a trader if you want to, and that's not always active. I know Richard talks out about it and says you shouldn't, but I can certainly say, here we go. If we just align the 2023 here and the 2022 monthly, let's see if we get these together. You can see as dollar started to get strong, it's been adverse for crypto, which kind of was there. That was the first hit on Bitcoin. That's a bit of an annoying chart because it's got all that super wicks here. It's spoiled the chart a little bit. Let's see if I can get a different Bitcoin in there. That's better. So you can see a little bit more of that. You can see from here, despite a rally, it's largely been down. So the dollar strength has been down. And in fact, the dollar bearish period, which I can draw for you. So there is some scope if the dollar is going to have a calming period when it's been very dominant. There is some scope for a possible degree of support for Bitcoin there. But that's not enough for me in terms of the reasons I've just given as to why I would look to get out. Mail us on support at the Market Sniper. You may be more of one of you, but I don't want to deal with too many people. Please, one guy. If you're a fund or an institution and you want to hoover that up, you can also mail us at support at the Market Sniper. This is not a negotiating. I'm not getting in haggling. I've come in quite low in actual fact in terms of the typical expectation for these projects. And all job lot in at 1.5 times the total value that I sacked is, if it launches and does what it's supposed to do, it's probably going to be something I'm going to end up regretting, if I'm frank. But I just prefer to reduce risk at this time. Okay, so you had a bit of TA with Hex, you had a bit of TA on the dollar in the end, you had a small amount of TA on Bitcoin, and you had an offer. No odds lots, please, no small amounts. I respect that not everybody has that amount for investable, and it'll eliminate most people, but you know, it just is. It's also part of the story for me. It's a retracement out of, I feel the cycle might have changed in terms of private crypto, and the concerns for the development of CBDCs that we've continued to expect seems to be escalating. So that's part of my reasons also for winding down exposure, and I think FTX's events accelerated that. Okay, thanks for watching. Thanks for not being too mean in the comments, for leaving, for withdrawing, and maybe having bearish reasons for why. And I'll catch up with all you guys again on traditional markets, crypto generally. Still generally feel, whilst it's a long in the tooth bear, that there could be some more sell-offs to come, and we'll see if the counterparty risk finally ends, or if the economist covers and all the anecdotes are in fact right, and you could be in a bottom and the dollar's now turning into a tailwind. And actually, it's bravest to be when it's the best time to be brave when everyone else is scared. We'll see. Until next time, catch you then. Bye.